My name is Farah Hussain, and I work for the Financial Advisory and Client Solutions Unit of the World Bank Treasury. And my job is to work with our clients and help them identify their financing and risk management needs and deliver solutions based on those needs. And I also lead the Green Bond Advisory to our client countries on behalf of World Bank Treasury. And today I am privileged to have with me my two senior colleagues, Heike Reichel, who is the Head of Investor Relations and New Products in our Capital Markets Department, as well as Laura Clayer, a sustainability consultant and former World Bank staff, as well as my co-author for this World Bank Guide for Green Bond Proceeds Management and Reporting. You can, so on slide 1, you can see the, you can see the agenda for today. First of all, we're going to talk about the objectives of the guide and the role that the World Bank plays in the green bond space. And then we will go into the initiatives that the World Bank is involved in to develop market transparency and guidelines for green and other kinds of sustainable financing. And finally, we will delve deeply into the World Bank Guide on Green Bond Proceeds Management and Reporting. This will be followed by a Q&A, and Amira will give more instructions about how we will conduct that Q&A, and then we will wrap up. So with that, without further ado, let's just jump into the presentation. So the green bond market has come a long way since the World Bank first issued the first labeled green bond in 2008. And since then, we have seen that the market has grown steadily. In 2010, our sister organization, IFC, issued its first green bond. In 2013, EDF from France issued the first corporate green bond. And by that time, the total issuance in 2013 reached $11 billion. And in 2017, new issuances went right up to $165 billion. And in terms of issuers, initially the market was dominated by supranationals like the World Bank, IFC, and other multilaterals. But now the market is pretty much very well diversified in terms of issuers and investors. So as you can see, there are energy utilities, financial institutions, banks, and even governments have now jumped into the bandwagon. And this started in the end of 2016 with Poland issuing the first sovereign green bond, which was followed by France. And 2017 also saw the issuance of the first green sukuk in the world with World Bank technical assistance. So for those of you who don't know, sukuk is an Islamic bond. And these were followed by other emerging market green bond sovereign issuances from Fiji, Nigeria, Indonesia, etc. And of course, after that, we had Lithuania and Belgium issue the sovereign green bonds. So what are green bonds basically? They're, as the name suggests, they are just like any other bond, and the way that you would issue a green bond is very similar to the way that you would issue a regular bond. So for a regular bond, for instance, you would want to first get a rating, you would have regulations to deal with. You would have to work with underwriters for the issuances and do road shows, etc., to reach out to investors, and then you would issue a bond. In the case of green bonds, you have to go through some additional steps. And basically, these additional steps are to give more comfort to the kind of investors who like to invest in green bonds, that they are really supporting the projects for which they are mandated to support, for instance, projects which have environmental and social underpinnings. So in order to issue a green bond, the issuer would have to identify potential projects and then develop a green bond framework. Basically, what the framework does is it shows the investors or potential investors how they're going to issue the green bond. And in the framework, they would be defining what the criteria of the projects would be and what the project selection process would be. And then they would show how they're going to set up processes and controls to manage the green bond process and how they will monitor and report on the processes back to the investors. And then in order to give the investors even more comfort, they would get an external review from an independent third party, after which the bond is issued and the proceeds are allocated to the projects. The issuer then monitors the use of proceeds and projects, and for many issuers after that will also undertake post-issuance audit and then publish an impact report. So what is it that the World Bank does? As you know, in the green bond space, and my colleague Heike will go into this in more detail, the World Bank works as an issuer, as an investor, and it also helps provide advisory to our clients in order to develop local green bond markets. So what we do is we leverage the experience and knowledge that we have, by issuing our own green bonds, and we share that knowledge and experience with our country clients. We work with regulators and help them develop their green bond guidelines or regulations in line with international best practices. We also work with policymakers in order for them to consider different kinds of incentives to defray the additional costs of issuing green bonds. And we facilitate demonstration issuances by sovereign and subnational governments as well as SOEs. So, for instance, we would be providing technical assistance on what the process is, what the requirements are. We would help them develop a roadmap and timeline. We would work with them on a green bond framework, helping them identify eligible green projects. And our environment colleagues are involved in this usually. And then we facilitate the delivery of the external review by an independent third party. And we also advise the issuer on their reporting commitments and communication strategies. And we also work with them to help them develop their impact reports. So these are a couple of examples of the groundbreaking work that we have done recently. One was the developing of the green sukuk market in Malaysia. So what we did in Malaysia was that we identified an opportunity to marry the Islamic bond with the underpinnings of the green bond to create a new financial instrument that could tap the Islamic financial markets. And we worked with the Securities Commission in Malaysia as well as the central bank in order to understand how the underpinnings of Sharia and the principles of green bond are very similar and can be used to work together and combine into a new instrument. We undertook a feasibility diagnostic, and then we launched an awareness campaign with different stakeholders, including 9 ministries, financial intermediaries, banks, institutional investors, rating agencies, potential issuers, etc. We also built the capacity of local green bond certifiers so that they would not have to go to the international green bond or sukuk certifiers to get the third-party opinions, and it would be cheaper for them to issue those green bonds. And finally, we provided technical assistance to them. We identified the issuers and provided technical assistance to them to facilitate the issuance from A to Z. So as a result of this, on July 27, 2017, a solar company called Tadao Energy issued the first green sukuk in the world. And this was followed very quickly by 4 other green sukuk in Malaysia, as well as a green bond. And local rating agencies there, RAM and MARC, established methodologies for rating green sukuk. And the large institutional investors there, the pension funds, EPF and QOP, also incorporated environmental, social, and governance criteria in their investment decision making. Another important achievement of this particular issuance was that it actually jump-started similar issuances in other emerging markets. For instance, although the Malaysian corporate issuances were very small, it inspired the Republic of Indonesia to issue a $1.25 billion sovereign green bond. This is another transaction that we worked on with Fiji. This was the first sovereign green bond in the emerging market. It was issued on November 1st, 2017. 100 million Fijian dollar, and the first tranches were completely oversubscribed, in fact 2 times oversubscribed, and we are now working with Fiji in order to develop their impact reports. After Fiji, we also worked with countries such as Nigeria. We worked with countries such as Nigeria to issue green bonds, and we are also helping the ASEAN Capital Markets Forum to come up with ASEAN Green Bond Standards with OJK, the Financial Services Authority in Indonesia, to develop their green bond regulations. And we are working with a number of other countries on the same kind of work.
I have to go back, like this slide.
Sorry, I need to go back a few slides.
Okay, go ahead. No? Okay. Which one?
Back?
You can use this one. Okay, now it's...
Okay. No. Okay. So as a result of our interactions with these clients, we kept, coming across similar questions from all our clients, and you can see some of these questions here. For instance, the basic question is, how much is it going to cost me, or how much more do I have to pay for this, and who is going to buy these bonds, and what does green mean? And why would I issue a green bond rather than a plain vanilla bond? So what's in it for me, and which standard should I follow? And then, after we've dealt with the basic questions, we found that what concerned them even more was about how they could manage the proceeds of the bond and how they would be reporting on the proceeds of the bond. Those seemed to be even more challenging concerns for them. And the reasons that they found the reporting to be so challenging was that there is really no, standardized procedure for reporting on green bonds. And of course, there's a lack of knowledge about, environmental projects, in the sense that the people who are actually working on the issuance of the bond are financial specialists and not environmental specialists. So they don't really know, what kind of, what are green projects, or what kind of metrics to use, or how to report on this sort of project. Many of our issuer clients have told us that they have very limited resources, so they don't actually have, dedicated environmental people who would be doing this work for them. When it comes to governments, what we saw was that there was a lack of coordination between different ministries, so between treasuries and line ministries, and in terms of financial institutions, there was a gap between, the relationship managers and the treasury operations, as well as with, the project owners. And of course, there is an inconsistent use of metrics. There are a lot of impact reports out there now, but different issuers are using different metrics in order to show the impact of the eligible projects. And project owners are, don't even know what kind of information to collect, and they're not. Some of them, don't even know whether the information is available at all. And for others, like banks, some of this data is very confidential. So they need to understand how they can disclose the impact of their allocations to green projects, as well as the expected environmental impact of these projects to investors in a manner that would not be too taxing for them, and yet be acceptable to the investors. So to address these comments, at the World Bank, we put together, based on our experiences, we put together a green bond proceeds management and reporting guide. The guide is mainly for public sector issuers, because we are the World Bank and we work with the public sector, but it is equally relevant for the private sector. And the objectives of the guide is to clarify the processes that these issuers can follow, and so that they can ensure the transparency and consistency that investors require and desire, and also to promote similarity in reporting so that it's much easier for investors to compare between the different bond issuances. And from here, I will hand over to my colleague Heike to talk about the work that we are doing in the capital markets to develop market transparency and guidelines.
Thanks, Sarah. So we thought it would be helpful to put this guide that we're presenting today in a little bit of context. And as Sarah mentioned, I'll be talking about the perspective of the World Bank as an issuer. So the reporting for us has been a journey towards harmonized reporting, and this journey still continues. So this slide just shows the World Bank's perspective, and it really starts with the project level. So documenting the impact for projects. Now, because of the mandate of the World Bank, because every project that we finance is designed for the specific impact it's intended to achieve, we have very detailed project documentation about the expected impacts and results for each project. So as we were looking to start reporting for investors on green bonds, we started with the project documentation that was available. Now, for investors, we summarized this information and created so-called project stories, where we highlighted key indicators that we thought would be most relevant to investors. And then we started aggregating that, first with newsletters, and then after an extensive collaboration with key investors and other multilateral development banks like EIB, African Development Bank, and IFC, we created a harmonized framework that's available on our website, and then published the first World Bank Green Bond Investor Impact Report that has been used as a model for impact reports from issuers since then. And we published the first one in 2014. Now, we leveraged off of efforts that had been ongoing already since 2011 and are expanded annually as part of a joint report on MDB's climate finance, which I've also shown here on this slide. And the World Bank Guide on Green Bond Proceeds Management and Reporting uses the World Bank's Green Bond Investor Report as a basis but simplifies it and makes it more usable for a broader range of issuers, and Laura will talk about that a little bit later. So Sarah has mentioned several initiatives that the World Bank is involved with, and there are many, many more that we are involved with, and others, such as IFC and EIB. And these are national, regional, and global initiatives. I've listed some here. This list could have gone over several slides. Most of you are probably familiar with some of them, like the Green Bond Principles and Social Bond Principles that are coordinated by ICMA. And in Europe, the EU High-Level Expert Group on Sustainable Finance. There's also the FSB Task Force on Climate-Related Financial Disclosures, and others. And while they are all different in the focus group, in the members, and how they're trying to achieve what they are trying to achieve, they all try to contribute to the development of environmental and climate risk management in the capital markets and financial sector overall. And the goal is really to mobilize mainstream finance to support the transition to a more sustainable economy around the world. They have in common that they focus on urgency, reporting, transparency, and harmonized information, and establishing data and standards. But I would like to say that we should not wait until all these initiatives have concluded. We're not going to have a perfect solution. It's important to get started. There are enough frameworks out there, including the guide that we're presenting today. Now, looking forward, just a few thoughts where I think we are going. Green bonds are really an excellent catalyst for environmental, social, and governance factors that are being included in decision-making for all investments. And the World Bank, as an issuer, we issue $50 billion a year in bonds that are all supporting sustainable development. And our bonds, as well as other organizations, are a good fit for investors who are looking to integrate ESG into their investment process and are looking for impact as well. And I've included here a research report that we did together with the Government Pension Investment Fund of Japan that highlights solutions for integrating sustainability into fixed income portfolios. So this is going to continue, and green bonds, as I mentioned, are a catalyst, and it's going to become more and more important for issuers to be able to report to their investors, engage investors on what they are using the proceeds for. So with that, I'm going to pass on to Laura, who will go through the guide.
Great. Thank you very much, and I'm thrilled to have such great participation from literally all over the world in this webinar. It's really a privilege to address you, and hopefully we will try to answer all those questions that we've heard from prospective issuers. So let me walk you through the guide. The methodology we used for writing this document was, in essence, based on our lessons and what frameworks existed in the marketplace. So we based the guide on the Green Bond Principles, which is the voluntary process guide that every issuer has pretty much used as a basis. We also, as my colleagues have said, leveraged on the harmonized framework for impact reporting, which was put together by the multilateral development banks, and then we created a hypothetical portfolio. We know that people learn on the basis of examples and concrete experiences, and that's how we came up with a hypothetical portfolio that I'll describe in a second. And we also wanted to touch base with clients, and we conducted an informal survey of sorts. We sent a questionnaire to Fiji, Indonesia, and Malaysia, and asked them questions about how they could meet the requirements of process management and reporting to base the guide. And we also sought informally feedback from international investors. But this is a very important step that all issuers should take into account. They should touch base with prospective investors that they think might want to buy their bonds to get an idea of what their needs for information are. I strongly advise you to do the same if you're thinking of issuing, because what we will present today needs to be calibrated with the expectations of the investors you plan to reach. And finally, as has been mentioned, it was really based on the impact report that the World Bank put together. So what I will discuss now is really focused on two of the 4 steps of the Green Bond Principles: proceeds management and reporting. Proceeds management, in a sense, is the distinguishing factor or the distinguishing feature of green bonds. It differs from a regular bond in that, as my colleagues have said, investors care about how the money flows through the accounting system of the issuer, because they care about the separation, the disaggregation, if you will, of these flows with respect to the general funding program of the issuer. And reporting is, in essence, the results, what it is that you are achieving with these funds, and that's why it is, as is stated here, recommended to be done annually. So we'll get into more detail on this. Now, for proceeds management, the principles call for a tracking of the proceeds, the net proceeds of the bond, and there are various options that we've seen in the market that are acceptable. One, which would be the clearest and simplest, would be to create a separate green account. So basically you have completely isolated the funds as they come from the proceeds of the bond, and you track them in a separate account. Option 2 would be to create a sub-account, which means that you have a general account to which all funding flows, but then you have a small sub-account, or say a sub-account that you call green sub-account, to which you are transferring the funds, and you will only track there the flows that are needed as your green projects disperse. And the third option is one that we think is easiest to a number of sovereigns because of the complexity of their own financial systems, which is we call it a virtual green account, cash account, which is in essence a ledger that you have created to reconcile the amounts that you receive in the bond against the flows that represent, in essence, the needs of the project. So you're in essence doing a reconciliation of equivalent amounts or equivalent debits to the flows that are needed for the projects. Now, to make this a little clearer to you, I have here our hypothetical portfolio. I hope everyone can see this. This is our 12 projects that were, in essence, created very much based on what we've seen in the marketplace, some in renewable energy, some in energy efficiency, transportation, agriculture, forests, waste management, water, and some in adaptation, coastal protection, and flood disaster risk management. And what you see on the second column, the approved amount, would be the amounts that are going to be supported with the green bond. This may not be the full cost amount. This is the share of the financing that the issuer is supporting. So you could have here shares of the total financing needed for a project, but what you report here is the amounts that will be reconciled against the green bond. And what we have here is basically disbursements by quarter. The green bond principles require that you track these. You could do it by quarter. Presumably you might be doing it more frequently, but what you could in essence do is track the disbursements over time. And as you can see at the bottom here, we have the flows summarized by quarter. So if you were going to present a first year green bond where you track the proceeds, you would, in this case, this was a $60 million green bond. That was the full amount that you were going to need for these projects. And in the first year, you achieved disbursements for $42 million, which is this amount. And as this is what you would then summarize. These flows here is what you would summarize in a virtual option, which is what we have here. So you have a credit for $60 million, and then you would report the flows for each quarter as shown here. Your report for the first year would probably end right about here, where you would have an outstanding balance of 18 because you disbursed 42 cumulatively. But that is a simple way of creating a ledger account where you can track the flows virtually. So moving on to impact reporting, which is probably the one aspect that causes more concern or more questions or more doubt in the part of many prospective issuers. The approach we took, and I guess the advice that we provide through the guide, is to really use the existing systems that you have. This is exactly what the World Bank did. We used the systems we had in place, and we improved them a bit for that first year report. The bulk of the work will be initially. There is no question that you will have to spend some time getting together with the units that are actually sponsoring these projects, people that know the projects maybe more intimately in the technical side. But our advice is that you use the same systems you have to report on progress on those projects and maybe adapt those a bit for the purposes of the Green Bond Impact Report. The way that we report on results is on an ex-ante basis. That means that the engineers, the people that put together the projects, have an expectation of results when projects are fully implemented and completed and implemented. So that means that these are based on best analysis of the most likely expected results of the projects, and that could vary over time. As you may know, some projects may have slight differences in terms of the actual results, and those that can be updated in subsequent reports. But in essence, you are reporting expected results at completion. Then you are expected to report on these until the bond matures or until the projects are completed, whichever is latest. Now, that may take a long time. Some of these projects, particularly in the energy sector, are very long-lived, and you may be, in essence, reporting on them for a long time. But you can also calibrate that depending on the expectations of your investors. There are various ways that you can report a portfolio. We will show here two approaches that we took in the report. One is on a project-by-project basis, which obviously is very detailed if you have a very large portfolio. Easy to say when we created a 12-project portfolio, right? But obviously if you have hundreds or even thousands of projects in a portfolio, that will be very difficult. But the reason why we show you project by project is that you can see the granularity, the details that would go into reporting results on that basis. But it could be possible that for you that will be not an option, either because your portfolio is confidential or because they have so many underlying projects that you have to summarize them. So it's possible to summarize by sector or portfolio, and that it's an example we provide here. So I'm going to show you now, this is very detailed. I hope that you can actually see this. This would be a template that is quite similar to what most issuers are doing today. You should use the systems you have in place and the data that you have in place for your first report. But what we have here, and I'm going to try to quickly walk you through the table, because this is kind of the details that that actually will take most of your time. It's in essence walking through this information we saw in the previous table. This is the eligible amount that you will allocate to these projects from the green bond. This will be the amount that has already been disbursed, and in essence you are reconciling this as part of the report. That means that you have disbursed 83% of the eligible amount. Then what you have here in goals and beneficiaries, this is the key of the matter. What you want to describe briefly is what this is about. What is this project really doing? How it's benefiting the environment and the population. And here you will see for each sector a brief description. In this case, we're introducing solar farms to generate electricity in an alternative way to diesel, which has been used to generate power in an industrial park. Or a wind farm, the one below, which is to supply power to a community that is distant, is off-grid, and it's benefiting 15,000 people, and so forth. So each of these little blurbs, of course, you could expand in your report. Maybe you could have a little brief description if you wanted, a picture of the project. That would be ideal, but if not, a little bit more description to give investors a context and texture of what these projects actually achieve. The next column talks about the project lifetime. Why is that relevant? I think it's important for investors to know for how long the project will be active, for how long could they project benefits if they were using the data you're supplying them to come up with annual estimations. The next one is the capacity and coverage. This is an important, way out. The capacity and coverage is a sense of scale. Very important to know whether this is a relatively small plant, like the one we have here. It's at 20 megawatts. So the units next to it give the context and in a sense, the coverage also. Like in the third project, we were talking about industrial efficiency. So how many industries are participating? It's 50 industries. Or in the next one, it's about efficient lighting. How many street lamps are you replacing? 15,000. Or in transportation, what is the size of the exclusive bus lane that you're building? It's over 20 kilometers, and so forth. So this capacitor coverage is quite important because it allows people to get an idea of scale, and scale also is a proxy for impact. Then the next columns are really that we start to get more granular. It means, so how much renewable energy are we producing? The first two rows there. So it's going to be measured in a measure of electricity, so gigawatt hours. This is the amount that we're producing. How much electricity in projects 3 and 4 are we saving? Again, it's a measure of electricity saved. In the other sectors, it might be things like what is the expected gain in ridership in mass transportation, meaning how many new riders are we actually incorporating in mass transit as opposed to private cars. Same thing with a light rail. So in this case of the light rail, we're talking about 200 new riders, which represent a 10% increase from the baseline. Some of these numbers may be hard to obtain. I realize that. A number of these hypothetical projects, most of them are in a way recollections or they are reflections of the kinds of results that we achieve in World Bank projects. And it could be difficult for you to obtain all of these indicators, but at least for some of them, at least the scale, the coverage, the beneficiaries, is some information that you ought to have, because in a way you have to justify these projects on the basis of social and economic gains. So whatever is available that provides the why we did this project, it will be useful. Then the subsequent column talks about emission reductions in CO2 equivalent. This is obviously an indicator that for a portfolio that addresses climate change or energy use, transportation is quite important. It is an area that requires assumptions to convert energy savings or renewable energy into CO2 emissions. It's complex. There are several methodologies out there to do it, but the people that have converted these will be able to provide you the notes or the assumptions that were used to develop these estimates. We have a column, second to last, which is the progress to date. That gives you just a sense of how far along the project is, which sometimes may match financial, sometimes may not find financial progress, but that gives investors an idea of how far along you are. And then we have this column called notes, which is very important. Notes will basically reflect the assumptions, methodologies, references that you use to develop the report. As I scroll down in the other sectors now, which is water and flood, coastal protection and flood management, you see that in the notes, in each of these projects, we had a number of assumptions, conversion factors, references, and so forth. This is quite important because you want to provide people that will go into more details a sense of how your numbers were developed. Now, I hope this didn't intimidate you. That was not the intention. This is obviously the highest level of detail that you could have in a report. But we also realize that for some issuers, it may not be possible to go to these levels. So it is okay also to aggregate projects. And here we show the most, let's say, aggregated report that we could think of, at least in this guide, which is to report by sector. And what you would do is you lose detail in terms of the results, but it gives at least some sense of what your portfolio is about. So in energy, you're summarizing renewable energy and energy efficiency, and you're giving a sense of the capacity of solar and wind and the efficiency, who is participating in the energy efficiency projects, and you're helping city XYZ, you would put maybe the name there, and the progress to date overall. This will be obviously much more aggregated, but it gives a sense of the kind of portfolio you have. You still need to have a bit of description, even if it's summarized by sector, but you need to give a sense of what it is you are financing, which in any case you needed because you had to define the eligible categories in the framework. So let me talk a little bit about what I call here conventions for reporting. So basically rule of thumbs that people in this market have agreed. Again, as I said, you report on the share of the project total investment that the issuer has financed with green bonds. So for example, if you have a private financier for one of the projects, you would only report the share that you are financing through the green bond. You report impact based on the amounts disbursed and outstanding to a project as opposed to amounts committed, meaning that, as I showed in the second column, I think it was, you show the proportion that was actually disbursed and outstanding of the project. Emphasizing again here the references for methodology for the metrics and the limitations, where they're applicable, you could reference that there are some limitations in your assumptions. And finally, where possible, I think we've heard from investors that they do care about the social benefits. Oftentimes we forget that the reason why a lot of these projects are put together is to, even if it's to sell a product, is to benefit the need of people and communities. So it's always good to try to bring the indicators to the level of people and communities. Thank you. So with that, I will pass it to Farah for the wrap-up. Thank you very much.
Thank you, Laura. Before we wrap up, I think we will go to question and answers. So, Amira, do you want to give some instructions
Yes,
as how we will conduct this?
Yes, thank you very much. Thank you for the speakers. Since I have muted everyone's mic input again, we would like you to submit your questions or comments through the chat function. We will give about 20 minutes for Q&A. Please do submit your questions. We'll take from our end and read the question and address to the question. So it is the floor of the chat is yours now. Okay, we have our first question. Laura, would you like to take that?
Yes, I will read it for the benefit of everyone. I assume that they cannot read.
They don't.
Okay, so the question goes like this. Would it hurt us if we don't adapt our reporting to the templates the more experienced issuers use? There are a lot of indicators that are in the templates you're showing us, but we're simply not staffed enough to be able to capture each of these indicators, let alone write up impact reporting to this level of detail. We worry about green bond investors not buying our bonds because we're still learning about how the market in the green bond space works. So remember that when I said that I hope I didn't intimidate you, so clearly I did intimidate you. That was not the intention. We strongly encourage you to report and go ahead and issue with the information you have. As I said, you do need to put a little bit of thinking and effort in the initial report because that may set the framework that you're going to use for future reports, at least the initial point. It's fundamental that if you are in a treasury department, that you have to get together with the operations side, with the folks that are actually supporting the projects, because they will have information. It's more the problem of coordination and obtaining the information than actually not having the information at all. So I would strongly encourage you to attempt to report with what you have, and it could be that you don't have that many indicators, that you have a more broader description along the lines of the slide that you have right now in front of you, where you start maybe by category or by region, or that you summarize your portfolio, and you seek out feedback from investors as you produce your first report.
And I think that issuers, investors understand that many first issuers, and especially the smaller issuers, will not be able to report in such detail. But they do expect that, over time, they will develop the capacity to deliver sort of more comprehensive reports. That it is not a free pass for anyone to, not report comprehensively over time.
Maybe just to add one thing to that, Heike. When I mentioned the journey that the World Bank, that we had gone through, we started with, as I mentioned, the project documentation. So if you are going to issue a green bond, it is important that you have projects where you're capturing this type of information, impact information that's of interest. And then you can start gradually with project stories, summarizing things, and then putting it into this standardized template. And investors like harmonized data because they buy green bonds from different issuers, and they want to aggregate. So if you can pick a few indicators per sector that you have that are harmonized in the way you present them, that's helpful to investors.
I'm going to take a question that reads as follows. Do you have any reporting recommendations for projects that are being refinanced? For instance, an energy efficiency project that is being both financed and refinanced with proceeds of a bond. A refinance project would be reported the same way in terms of the results that you obtain for a refinance project. The only thing you would have to do in your report, you would have to note it. You can put a footnote, or you would have to put a particular note talking about what proportion of the project is refinanced. Maybe it's a percent, or if it's 100%, you say it's 100% refinanced. And the other thing investors like to have is what they call the look back period. So far, how far back was it actually financed the first time, and you would have to disclose that information. Also, whether the project it's fully operational, basically give an idea of its state.
And the look-back period is usually 2 years.
That's what we have seen, yes.
And these are actually in our frequently asked questions in the guide. So if you download the guide and look at them, you will see that many of the questions that you are asking are already in the guide, in the frequently asked questions section. Heike, do you want to take the first question there?
Sure. So the question is, considering a significant amount of different initiatives working on green bond standards, what are the prospects of some unified procedure of framework preparation to be implemented on global scale in nearest years? When I was going through my slides, I mentioned we shouldn't wait until all those initiatives have been completed, because it's a huge effort to harmonize and provide global standards. So I think issuers should take what's out there, frameworks, and start with something, and things will evolve. I mean, climate finance and expectations of climate are evolving as well. There are going to be national and regional differences. So it's hard to predict, but I really think that we shouldn't wait for perfection, but get started, because there is urgency to change the way things are being done.
Another question says, since this is for scaling up finance, to which extent can these be reconciled or should with NDC reporting, National Determined Contributions under the Climate Agreement? Well, I mean, there should be consistency for sure. If your NDC is talking about, for example, emission reductions, you would use consistent data. If you're a country and you're reporting on a year that you have achieved X% of your target for renewable energy and through certain investments and therefore meeting your NDC in terms of emission targets, it should be consistent. There will be some areas where you may not report the same way, and you could have projects that are not really necessarily addressing climate and may have slightly different indicators. So I would say more than, and the reporting ought to be simple for green bonds. That's our take. I mean, it may come to a surprise, but we always work with the expectation that investors want to be able to understand the information and they are not technical experts. So maybe you need to strive for consistency or coherence, but not necessarily exactly the same format.
So I'll take the next question and I'll read it, including the intro, which is greetings. Thanks very much to all speakers. This has been an excellent session and it's great to see the leadership the World Bank Treasury is providing on this critical subject. We know the sender, so thanks for that. Now the question is, how has the international investment community responded over time to green bond issuance? Are investor requests for transparency becoming more similar and thus easier for issuers to follow one single reporting standard? When we developed our first World Bank Green Bond Impact Report, we worked very closely with investors, and our intention was to create a model that others could follow. Now, my colleagues on the advisory side of working with sovereigns have taken that as the basis for this guide. And we've heard that investors, as I mentioned, they like comparability, so they like if issuers follow a certain model. I'm not going to call it standard, but follow a model. And that's what we see the World Bank Impact Report to be, and this guide, which has been established to make it more applicable to a broader range of issuers. So I think that, yes, the requests from investors for transparency are becoming more similar, and you know, for an issuer, if you just start with something, and you can start with this guide and adapt it, but make it so that investors can compare issuance as much as possible.
And if I can add to that, while we were writing this guide, we reached out to a number of investors, and we found that they were, you know, more or less asking the same kind of questions and giving, you know, similar responses to our questions. So that also answers some of your questions. And we are already working with Fiji and a couple of issuers in Indonesia on implementing the recommendations of this guide and using the template that is recommended in this guide for their impact reports. And the other issuers that we will be working with, and we are already working with in other countries, we will be doing the same. And our hope and our expectation is that, you know, this will achieve some sort of, you know, standardization.
I'm going to take a question that it's a good one. It says, I'm really so impressed with the idea that at last banking services started to give due care to pro-environmental projects. I may say capitalism is considered environmentalism right now, with a smile. My question is, how can a foreign debt employee in a developing country give due care to a green bond project, amid the dire need of funds for industrial projects? Well, what I would argue is that you can do industrial projects that are environmentally responsible. So you could still do an industrial project and try to minimize any environmental effects. For example, you could build, as part of an industrial park, a water treatment plant, and you could finance that treatment plant with a green bond. Or you could have a waste management facility for industries and fund that with a green bond. So I hope that you are not discouraged. even in developing countries, you will have huge needs for transportation, and the way you plan transportation can have a better effect on the environment. So I don't think that it's necessarily exclusive to just the developed world.
So let me read another question that we have. What are the best practices of other sovereigns in terms of coordination among government bodies, example between the Treasury and those involved in the green projects? So in the countries that we've worked in so far, what has worked is to set up some sort of a green bond steering committee or a working group which involves both the ministries of finance as well as aligned ministries. And usually the World Bank also is part of that committee, and they basically work together to define, all those criteria and processes that need to go in your framework, and also who will be doing what, who will be approving or giving the final approvals, etc. So that has worked very, very well for Indonesia, for Fiji, for Nigeria, and also for Malaysia.
So there's another question here. It says green bonds is a new area for us, so we thank you for the information. Is there a minimum size for the bonds? And based on the reporting template presented, are issuers required to provide projected information along those categories in the project documentation prior to issuing the green bonds? So to the minimum size question, as Farah explained, basically the green bond process is a parallel process to traditional or other bonds that an entity issues. So the minimum size requirement for green bonds would be around the same as for other issuances. Now, overall, green bonds have tended to be smaller for issuers than some of their other issues, but it's comparable in terms of minimum size. So the second question, the reporting template presented. Investors will not expect you to have an impact report before you issue your green bonds. However, as you are thinking about issuing green bonds, you are basically starting on a journey to engage with your investors about the purpose of the funds that you raise in the capital markets. So you should have projects that capture this type of information. And that's one of the big benefits of green bonds, is this transparency and accountability. So as you start thinking about green bonds, if you're not already capturing that information, you may have a longer journey before you actually issue the green bonds. But investors don't expect you to have a full-fledged impact report before you issue green bonds. You should, however, already have projects where you're capturing the type of information that you will be reporting on.
And also on the minimum size, usually institutional investors will have a minimum size below which they are not willing to invest in for liquidity purposes or any other purposes. This figure may vary for different investors, but 200 million euro usually. And of course, it varies also in the domestic markets. But we saw in Malaysia that despite the issuances being very, very small, because this was an area in which they were very interested in, and they had prioritized the environmental, social, and governance criteria for allocations, they were willing to invest in the smaller bonds. But yes, that is a problem. The small size is a problem.
You want to take this one?
Yeah. So another question, does the World Bank have any plans to get all countries involved in such an amazing idea? I agree, it's an amazing idea. I mean, any sort of obligatory measures to fund a country with a certain amount by adding a condition that a percentage must be allocated to environmental projects. Deep thanks for your highly informative, well-organized session with an effective presentation and convincing, interesting speakers. Thank you very much for your kind words. At this point, we do not have any plans to, put forward any mandatory measures, but we are certainly working with all our countries, especially those that have developed capital markets and are able to issue bonds. We are working with them to, develop their green bond guidelines and green bond regulations, and helping them develop incentives, etc., that will catalyze green bond issuances. So we are doing that, basically, all across the world, in Africa, in Asia. Obviously, our work in Asia has taken off in a very big way, but definitely we have plans to do that for the other regions as well.
Thank you very much, Farah. We will take one last question.
Okay,
so
I'll take this question. The question is, if the tenor of the green bond is short, the likelihood of a project to be fully completed within the life of the green bond may not be reached. How will this impact investor outlook, and what happens if the sovereign decides to issue again? This is a really good question, and it's an interesting thing about the green bond market, which is that in general, the green bonds that are issued have a shorter maturity than the projects they are funding. But green bonds are not issued on a project-by-project basis. They are issued as a portfolio. So there are many, many issuers that have several green bonds outstanding. And Farah showed on the first slide of the green bond market, the World Bank, for example, we've issued in aggregate $11 billion in green bonds through 145 transactions in 19 currencies. So this is, I would say it's a normal process that issuers have several green bonds that they're issuing at the same time, and it isn't the case that one green bond finances one project. And that's also where the refinancing comes in that we were discussing earlier, because of the shorter tenor of the green bonds and the longer tenor of the project.
Thank you very much, Heidi. Thanks again for all speakers and the participants for dedicating your morning or evening time for this session. This is one of the largest participated session in this FY. So I will leave the last few minutes, open the floor to speakers if you want to have a final conclusion. And I will be sending you the PDF version of both report and the presentation, and with short survey questionnaire. And we hope to see you again in next session. Floor is yours.
Just to wrap up, as we mentioned, ESG and project impact data is now a big focus for all investors, and green bonds is an opportunity or a way for them to actually, fulfill those ESG and impact-based mandates to finance this sort of, SRI and ESG projects. But transparency and disclosure are very, very important to these investors, and we understand that these are very challenging requirements for many of our issuers, especially the smaller issuers. But we at the World Bank have developed this guide in order to help them, address these challenges. And we are also working with, issuers to help them implement the recommendations of these guides. So if you are planning to issue or you have clients who are planning to issue, please feel free to reach out to us, and we'll be very happy to work with you. Laura, any last words?
Thank you very much, and I encourage everyone to take the dive, the green dive, and all the best.
And we will try to get to the questions that we didn't get to on this webinar separately. So thanks very much, everybody.
Thank you, and thank you, Amira.